Okay, okay, amazing people. Now, let me share with you about bearish order blocks. In the previous lesson, I talked about bullish order block with an inclusion of market structures. So I'm going to delete this a little. Okay, let me just leave them. We talked about order blocks. We talked about order blocks. And also remember, order blocks go hand in hand together with the structures, market structures. And always take your trades on order blocks and take your stop losses on order blocks. So this was another level of the structure, another level of a structure like that. So what happens there is that these guys did their entries. This is where their entries for market makers, where they entered here, look how the market pushed. They also entered there, look how the market pushed. So what is the secret? The secret with order blocks and market structure is that the market, as soon as the break of market structure is a leading indicator to the direction on which the market is going to go. Remember that. So here, look at this. The structure was already broken, the market went up. The next day, the market just rose and went up. Now let's talk about how can you identify bearish order block and what are bearish order blocks? Bearish order blocks, these are candles. These are last bullish candle followed by a movement to the downside. Let's try to identify bearish order block. Look at that. Sorry, let me use this one here. Here, that is a level of that last bullish candle. That was an order block there. Okay, that was an order block. And these guys used it to break this structure. Okay, that last bullish candle followed by a movement to the downside. So the market was dropping for 8 hours to the downside, which happened so that these guys even managed to break that structure. So since after the structure was broken on a 4-hour time frame, I expected the market to do a retest, of which after it did, it broke. You can see the market went up. So if you missed this, this could have been your chance to make an entry. The moment you start seeing some rejection, higher price rejection, just know that now the market must go down, of which they did. Again, the market pushed to the downside for 8 hours, reaching there. Okay, the structure was already broken, this structure. So what these guys did, they went out to mitigate some losses. Those who love to do break trade to the breaking trade or break of structure, you know, breakout traders. Don't be a breakout trader, have patience. So the market went now to retest and to mitigate some orders here. The market ended there, and then we can see again it created that. Okay, so as soon as you see maybe in the morning the market opens, you see the market pushing to the upside, just look the levels. Where exactly is the market? And the market was going towards the level of this zone, and this zone is an important zone such that you don't have to miss your trades. That zone. Okay, let me use a white. That is white zone. It is a zone or a swap zone, and a swap zone can be defined as this is a level which changes after it is broken. That is a zone. So that is a swap zone. And a swap zone is where a demand becomes a supply. So as you can see here, the demand was broken. So we expected the market to, when it goes up, to find a supply. So this was another reason for you to make an entry where you can buy, you can sell higher and buy low. Now, in this case, only sell high because you are looking at the break of the structure that happened previously, and now the market is just trying to go and test these levels before it breaks down. Look what happened. When you are trading the market structure, you're trading with these big guys. You're thinking like them. So look at them. They entered trades there just like they did there. Look at the movements. How can you know that this is a movement for the, this is where market makers did their entries? Just look at their movements are the ones that break structures. So they entered more trades there. Look at this. The structure was broken and the market went exactly in the area of that bullish order block. That is where it reached. Okay, so now here was a bearish order block as well as there. Okay, let me now try to spot some, show you some bearish order blocks that you and I can use as an advantage. That one here. And also this one. A bearish order block, these are last bullish candle followed by a movement to the up to the downside. So from there, you can see that market makers did enter and the market reached to that level. So they used that bearish order block to break the structure. And how can you take advantage or trade this type of moves? Just look at the level of the market. Why is the market? Already we had an indication that after this structure was broken, the market came down. So I expected the market to drop more because after the structure is broken, the market usually returns, tests that zone, fails, consolidate a bit. So next, when you see the market going up there, just know that it is not going to break the structure higher. It will definitely start coming down. So you could have entered there or even place your stop loss there, and then the market begins dropping just like that. That is what this is all about. Okay. And the other reason why the market couldn't break, couldn't go up, it is because there was this presence of a bearish order block, that level, bearish order block, that presence of a bearish order block. If I may even try to box it like that so that you can see how to put order blocks. Okay, so there is no way the market could go up. No. And these order blocks are a representation that market makers entered their trades there. So these guys are already had in it to continue pushing the market to the downside. So what did they do? These guys did some amazing thing. They just came here, mitigated some orders, started consolidating, trapped some people who thought the market was had already found a support there, especially support and resistance traders. However, with you and me, you can even confirm that there was also some nice structures like an M. So the market went, created, reached that level. You could have entered there knowing that the market is not going to go to the upside. Enter there, you put a stop loss there, and then the market begins dropping just like that. That is how you trade. Okay? That is how you trade with these order blocks. It is simple as that. And you must understand that that is the way it is. I will see you in the next lesson.